Yeah, so I guess I just did want to start by mentioning my name is Jackson. I am a business development representative with Equitable Bank. And going forward, I'm sure some of you might be familiar with Alex for anyone who has dealt with Equitable previously. Him and I will be sharing the BC book. And so going forward, I will actually be the business development representative for your brokerage. And so, yeah, I do just have a quick question. Do you mostly have alternative deals or prime deals, or what do a lot of the deal flow looks like coming across your desk?
So firm wide, we probably do 85% prime lending. I'm going to say
Okay.
about another 8% is alternative, and then about 7% is a mix between private and commercial.
Okay. Okay, great. So yeah, what I did want to speak to you about today is about Equitable Bank. For any of you who don't know a lot about us, we are one of the bigger lenders in the alternative space. We do have prime and reverse mortgage offerings, but alternative really is our bread and butter. I guess without further ado, I'll kind of jump into it here. So today I just wanted to speak to you a bit about why Equitable Bank, a bit about our market focus, our different programs and products, as well as our relationship with our broker partners. So why Equitable Bank? At Equitable, we really are committed to providing superior service to all of our partners. We like to think that we challenge the status quo. Just recently, we've launched our reverse mortgage product. We have our EQB savings account. Typically, we are very responsive when it comes to changes in the market. And then we have received feedback previously that we are very good at sort of listening and adjusting our policies and practices to our broker partners. But above all, service is our passion. And Equitable is backed by various funding sources, as you can see here on the screen. But what I did want to highlight is that Equitable Bank has actually been ranked as the #1 bank in Canada by Forbes 2 years running now. I think that's in large part due to our customer service and just our general broker and customer experience. Equitable really is a one-stop shop for everything residential mortgages. We have our alternative mortgage offering, which is sort of our primary offering, but we do offer prime and reverse. Just to highlight a couple of things, we are nationwide. So we do have offerings all across Canada, specifically in BC. We have a number of approved lending areas. And what we try to do is really take a solutions-based approach where especially on the prime side, it can be very stringent, the document requirements and parameters and whatnot. So specifically on our alternative side, we try to be as flexible as possible. Same thing applies to prime and reverse to an extent. I did want to speak primarily about alternative today, but if any of you did have any questions about our prime or reverse products, feel free to. At the end, there will be some time for questions as well, as feel free to reach out to me anytime after the presentation. Finally, above all, we believe in providing superior customer service to all of our broker partners and clients. We have a dedicated team of RBMs and BDRs such as myself, as well as a dedicated underwriting team and fulfillment team. Overall, all of our company sort of lives by the mantra of service is our passion. So just to speak a little bit about our alternative lending side, our primary market focus really is, as I said, trying to be a solutions-based option. What falls into that first and foremost is business for self. So we are quite flexible when it comes to business for self in terms of our document requirements. We'll get into that in a little bit, but we are really good at sort of being able to take very unique situations and be able to get them over the finish line. We are also open to real estate investors and applicants with imperfect credit scores. Again, we really do what we can to make sure that we can just try and get people qualified, of course, while sticking within our policies and guidelines. And then on the alternative side, we do have several of our value-added products. That includes our Heloc, or our line of credit, our adjustable rate mortgage, total worth program, equitable advance, and extended ratio, all of which I will speak about throughout the presentation here.
Jackson, just a quick question. There's a lot of great products mentioned there. Are all of those available to the brokers at White House Mortgages?
Yes, so all of these programs are available. I will be speaking about each of them a little bit more in depth later in the presentation, but these would all be considered products that we have available just specific to the alternative side. You will see a little bit later just exactly where each of those will fit and how, sort of sticking to that theme of being a solutions-based lender, how some of those products apply to different types of borrowers. So first and foremost, for business for self clients, we do accept a number of different types of documents. Usually we do go for the bank statements approach, but there is the option to do for, say, commission borrowers. We accept commission letters and year-to-date commission statements, employment contracts. We still accept foreign BFS income, gifted down payment. We have a number of different viable income sources. And then as well, if you or your borrower does have a very unique situation, you can always feel free to run those past me or past one of our underwriters, and we can always see if that's something we can make work. Just to highlight some of our BFS items, and I guess by extension, our alternative items, is that we, as I mentioned, do accept new immigrants to Canada. We accept both registered and non-registered BFS owners. We go up to a 48 GDS TDS on our alternative, and we do use a 30-year amortization. Now, just to speak a little bit to our registered and non-registered business owners. So I've got a couple of examples listed up on the slide here. I'm just hoping to run you through exactly what different document requirements look like for different types of BFS borrowers, just because we really can find applications to BFS owners of all walks of life, realistically. So just to look at some of the document requirements that might be asked for certain types of borrowers. So our typical registered business owner, this is sole proprietors, sole partnerships, and corporations, will usually ask for three things. First, proof of business ownership. So that could look like articles of incorporation, a business license. It also extends to a notice of articles or even just proof of GST registration. And then we will ask for a minimum of 3 months consecutive bank statements. Our reason being is we will use any income deposits into the 3 months bank statements, create an annualization of all that income over 3 months. And then that gross income is what we end up using. I guess that 12 months annualized gross income. And then finally, we will ask for a self-declared income letter, which, using the gross income that we establish from the bank statements, we ask for yourselves and the borrower to list out any of their relevant expenses for the business. We'll deduct those from our gross income, and then we'll be left with a net income that we use for qualifying. I imagine some of you might have some questions for the self-declared letter. Again, I do have a separate section for that at the end to help kind of go over that a little bit more in depth. And of course, at any time, if any of you do have questions, feel free to butt in. I apologize if I'm going a little bit quick here.
Not quick at all, Jackson, but I will come in with a question, which is, when you say that there's 3 months bank statements, are you looking for 3 consecutive months, or can we cherry pick the best 3 of 6? So
it will be 3 consecutive months, but it doesn't, I guess I should say minimum 3 consecutive months, because it doesn't have to be just 3. We, by saying minimum 3 months, mean that it could be 5 months, it could be 6 months, it could be 8 months, 12 months, typically any more than 12 months. And we will tend to prefer a T1 or notice of assessment just to show the past year's income. But anywhere between 3 to 12 months, really, as long as it's consecutive, you can then sort of, in that case, cherry pick which consecutive months of statements you want to use. I should also mention that these statements only need to be recent to 120 days from the funding date. So say there was one rough month, say a borrower had a file closing in July, say June has been a bit of a rough month so far, they could use just May, April, March, or even I think they would be able to use April, March, February if they preferred. And so those are for our registered business owners. Then to get into non-registered business owners, our typical non-registered business owner, the example used here is a daycare provider, but it extends to also a, say, golf instructor, or maybe a piano teacher. Those borrowers that do own a business, it may not be registered, but we can prove consistent income. In that case, we would ask for 2 to 3 reference letters. Those are usually from, say, a client of the golf instructor, for example, or from the parent of one of the kids who's being taught piano, another example. We would ask for 2 or 3 of those. Usually we ask for those to indicate something like the cost of the lessons, where the lessons take place, how long the lessons have been going on for. Just in general, we just want to make sure that it is all reasonable to the nature of the business and it's all kind of consistent with the notes that we've been given. And then same thing, we will use our minimum 3 months bank statements and our self-declared letter to confirm that income. Next would be commission borrowers. I think on the slide, it mentions realtor, financial planner. I also like to use car salesman as another one, or a sales rep for a tech company. What we'd ask for in this case is job letter confirming employment, but we will also occasionally refer to it as reference letter. This is essentially just a document, much like a job letter. It could be an employment contract, really just anything confirming the employment of the borrower with the business. And then again, self-declared letter, but where things change from the previous bars we discussed is for commission income, we do like to ask for 6 months rather than 3, just because commissions can be a bit up and down. Commission statements in that case might look like a full year to date for 2021. Realistically, it just needs to be a minimum of 6 months. Next example, contract employees, so truck drivers, consultants, similar to our sort of commissioned employees, except really we only need 3 months bank statements showing the income coming in, and then same thing, letter of employment from the employer or an employment contract, something along those lines. And then finally, sorry, Pete, did you have a question?
Yeah, I was just going to ask, what is the minimum time that the person would have to have been sole or BFS? Like,
For sure.
they just started being BFS 6 months ago. Does that work, or how long?
So I think the official guideline is if they're a registered business, we like to see that the business has been registered at least for a couple of months, because we do ask, I guess I'll phrase it this way. We ask for 2 years work history, but in terms of confirming the income, we really just need the 3 months. More often than not, if you've started up a business within the last 3 months, chances are you aren't profitable enough yet to be able to debt service a mortgage or something along those lines. But there are situations where if you are able to, afford the mortgage using any income from a recently established business, we do really just ask for the 3 months history. There may be questions from people on our fulfillment team just wondering how it would have gotten to that point in such a quick period of time. But yeah, as long as we're able to confirm 3 months of consistent income, that's really all we ask for.
One other quick question there, Jackson. Do you ever want to see the tax documents?
We would only ever ask for tax documents in a case where we're using, I guess an example, if we're able to use 3 months bank statements, we wouldn't adversely ask for a notice of assessment or a T1 to confirm that income. Off the top of my head, a couple of examples where we would ask for tax documents would be any sort of family-owned business. If a borrower pays themselves a salary out of their own business and they'd rather use the salary that them pay themselves instead of the actual business income, we would ask for a notice of assessment in that case, just to confirm that they have actually been paid out that income and it's not just documents that they've sort of created themselves out of their business. Off the top of my head, there are examples, but I guess more often than not, if we are able to confirm the income that we need in the 3 months bank statements, it's very rare that we will ask for additional tax documents.
Do you have a minimum and maximum mortgage on this type of mortgage?
I believe our minimum on the alt side is 200,000. It might be 150,000. It's around there though, 150 to 200,000. Okay. And then we can go up to as high as just last week, actually, we had a file where I believe the mortgage was 3 3/4 million was approved, but we do need to receive exceptions for anything over, I believe it's 2 million. And it does include a sort of pricing premium. but that's really on a case-by-case basis, the maximum.
What is the pricing for something like this?
So our prices
Prime
are,
minus 9? No.
so we do have our, no, not prime minus 9. That obviously on the prime side, we do have to go a little bit higher on alt, unfortunately.
Of course.
But it would be on the fixed side, 680 FICO, owner occupied, 1 year would start at 5.34%. And then our variable or adjustable rate would start at prime plus 0.65%. That's as well for the 680 owner occupied borrower.
Okay, and the variable, is that a 1 year, 5 year?
Variable would start at a 3 year, and then
3
we
years.
have 3 year and 5 year terms available. The fixed we're able to do, 1 through 5 years.
Okay.
Great. And then, I guess just to finish off this sort of segment, the last example of a borrower would be gratuity based. A lot of times these borrowers have a base salary portion and a either gratuity or tips based income. In this case, we would treat the base portion like a salaried borrower, letter of employment, and either pay stub or T4. And then for the gratuity portion, we would use that letter of employment as our sort of reference letter. And then the stated declaration of income, stated self-declared income letter would just list the total amount that we annualized in the bank statements in terms of cash deposits or however it is that they receive their gratuities. And then I've spoken about it a lot. Here's our self-declared income letter, or often referred to as our SDL. If you can see my cursor, I'm not sure, but you can see at the top, we just ask for some of the relevant business information. So the borrower name and their occupation, and then business name, nature of the business, how long the business has been around for, number of employees, things like that. And then gross income would be what our MO will often calculate using all of the income deposits that have gone into the account over the 3 months or potentially longer period. That's what will get listed at the top. And then it is self-declared. So the borrower can essentially list all of the expenses that they've incurred over the last year, or just what they think would represent an annual term for them. It all really does end up being based on the nature of the business. Say a contractor, they might have some cost of goods sold or materials expense. They probably have some salaries and wages or subcontractors expense. They might have automotive expenses, telecommunication, maybe even marketing. And so that would all be listed by the borrower on that portion of the SDL. And then it is self-declared. So we aren't too strict when it comes to actually confirming those expenses. We're really just trying to make sure that it is somewhat consistent between the bank statements and what was listed on the SDL. So you should never have an MO going, oh, what's this, $50 withdrawal for? What's this $200 withdrawal for? That sort of thing. And then the net income we're left with is what we end up using for qualifying. And then to speak about real estate investors. So you can see some of the benefits listed here on the screen, but one thing I do want to point out is that there is no limit for the amount of rentals that can be in a client's portfolio. Typically, we max out at around 4, but I personally have dealt with files where 2 borrowers between them have had 8 or 9 properties in their rental portfolio, and we've helped them to purchase another. We do use an 80% rental offset, and we take into account things like property tax, heating, any condo fees if necessary. And another thing I want to point out is that all the BFS requirements that I've just spoken to you about, those all remain exactly the same for real estate investors. So we don't ask for any additional income requirements. There is a slight pricing premium, but in terms of documentation requested to meet our debt servicing and TDS, GDS, whatnot, it all stays the same. Then for any imperfect credit borrowers, we understand that life happens, and the main thing we want to consider is for any borrower with an imperfect credit, we just want to know the story, and then it all kind of makes sense. We do loan to borrowers that are 550 credit and below. Again, it does involve a slightly higher rate to start, but we really do have solutions for any clients, even clients with no credit. So we really do, again, sort of try to keep to that solutions-based theme, and we really do try and make sure that we can get as many people as we can qualified within our, within reasonability. And then for our different programs, so I already had mentioned the different types of alternative programs and products that we have. So existing products, we have our fixed and adjustable rate mortgages. We have our combo and standalone Helocs, which are essentially first and second position Helocs. We have our prime suite, which is our A side, and then we have our total worth program. And then recently, we've also just added the extended ratio and equitable advance programs. I will speak mainly about equitable advance. Those the two programs are quite similar, and normally borrowers do lean towards the equitable advance program.
Jackson, a quick question.
For sure.
Going back to when we're talking about bruised credit, hurt credit, consumer proposals, bankruptcy,
Sure.
can you take clients that have had a consumer proposal or bankruptcy, and how long after those would you take them?
Yes, so we can take borrowers that have ongoing consumer proposal. I think with bankruptcy, from my understanding, the issue is that if a borrower is currently considered or has an ongoing bankruptcy, I don't know if they are able to sign onto a new mortgage until they've paid that out. But consumer proposal, we fully can still loan to borrowers if they have that ongoing. Normally, our request is that they use the portion of the proceeds that we're issuing to them to pay out the remaining balance of their consumer proposal. And then we do almost treat it like a borrower who's not ultra low credit, but low credit. So our rates do start slightly higher. But anywhere from a borrower having consumer proposal to, I believe, within 24 months of their discharge, we can still loan to them just with a slight premium to the rate. And then once they're 2 years removed from their consumer proposal, there's no premium whatsoever. We can just use their credit score as it stands. Yeah, so just to speak about our products, so we have our Heloc offering. Much like many other standard lines of credits, the Heloc is a good option for any borrowers with low credit, as well as for any of our sort of BFS clients. Our Heloc does start reporting on the credit bureau as soon as the mortgage is closed, so it's good for credit building, as well as BFS clients. It's great for any ongoing business expense requirements that they might have. And then I guess just to mention, the balance can also be paid off at any time without penalty. And once they've been approved for their credit limit, they're able to have that reissued at any time. Sorry, Deb, do you have a question?
I do. So there's our brokerage covers all aspects of the valley, the Okanagan Valley.
Okay.
I'm not sure where you're located. Where are you?
So we are based in Vancouver, but we do lend all across BC.
But you're in Vancouver. So do you know the
Yes.
Okanagan Valley at all? So not really.
Yeah.
So
yeah,
you've driven through. So we have brokers from Osoyoos all the way up to Prince George. Okay. So we've got Osoyoos, Kelowna, Vernon, Salmon Arm, Kamloops, and Prince George. Okay. And Oliver. I think I got it all. So do you lend in all those areas, or are there restrictions? For sure. I don't want to affect the presentation here, but I do have, I'll leave it as this for now. I do have a full lending sheet, which I'm happy to send to you after. Just off the top of my head, some of the areas that you mentioned, Vernon, Duncan, Salmon Arm, are all within our available lending areas, as well as anything in this sort of Okanagan area, like I believe Kelowna, West Kelowna are just a couple off the top of my head. I didn't say Duncan, but that's good to know. Okay. What about Prince George or Osoyoos? Prince George and Osoyoos, I would have to double check. Okay. Again, I do have the full list of approved lending areas that I'd be happy to send out to the entire brokerage after we've concluded. That'd be great.
Hello, Jackson. I just want to add a question since you're on this topic already. So when you look into I'm the Prince George broker, could you also check and see what loan to value? Because I've noticed sometimes it drops, and if they still do the area. For sure. And you were talking about rentals, like when you said there's no limit. So if I had 13 rentals, you would look at that?
So it is on a case-by-case basis. I think 13 rentals for one borrower is a bit of an issue. No, it actually was for 3. I've already done it somewhere else, but I just want to know for future reference. For sure. So our guideline is we do up to 4 rentals per borrower. seeing as how there would be 3 borrowers on the file, 13 is quite close. I mean, I can't offer any guarantees, but I imagine, as I said, I had a deal when I was on the fulfillment side where it was 9 rental properties between 2 borrowers, and that was an exception. So I'd imagine it's definitely something that we could look into.
Okay, I just wanted to get a idea and a starting point, but on that, did you say doors or properties? Like one of the properties is a 4-plex?
Right. That I would need to look into. I know that certain types of duplexes, triplexes, we will often sort of qualify as one rental, even if it's several units. So that one is a bit more tricky. I would have to speak to one of my underwriters about that one. I'd be happy to look into that for you. Great. I'll make a quick note of that.
So Jackson, just a quick note, we're running close to 30 minutes. So
Okay.
if you've got some, a few points to make, that would be fantastic. And then maybe we'll open it up for any other questions.
For sure. Maybe what I'll do is I will just quickly mention some of our products. So we did speak about Heloc. We do have our adjustable or variable rate mortgage. One thing I'd maybe mention is the prepayment penalties. They are quite low compared to some of our competitors.
So is it adjustable or variable?
It's adjustable.
So
So
the
the
payment
payments would
changes
go
with
up.
changes in rate?
Yeah, so the payments would go up as prime increases. But in terms of the, I guess, recent climate of rates increasing, we have noticed this has been kind of the more popular option recently, just because of the lower rate. We are able to get people to, I guess, qualify, just as the rate is slightly lower. The qualification rate is slightly lower than on the fixed side right now. And then on the topic of qualification, the other program I would bring up is our Equitable Advance program. So for this one, it is a minimum beacon of 600, and we are able to consider BFS, salaried, as well as typical SFR and rental properties. The key benefits of this product I'd want to mention are we can go up to 60 GDS-TDS for BFS borrowers and 45 GDS-TDS for salaried, as well as we use a 40-year amortization, and qualifying rate is just at contract. So it would be that 7.09%. So this, again, is another option that people have started to sort of look at in the last couple of weeks. And yeah, sorry, I don't want to take up too much more of your time. I guess I would just mention our broker compensation program. If you wanted to take a look at that, we do offer 50 basis points on our 1-year fixed, 60 on the 2-year, 90 on the 3 and 4 years, and 110 on the 5-year, excuse me. And then 75 basis points on the 3-year adjustable and 85 on the 5-year adjustable. One other point I'd make about our broker compensation program is on the reverse side, we do have a very lucrative program. It can be up to, on the initial reverse mortgage loan or mortgage amount, we do up to 200 basis points, up to 15,000, or 120 basis points, whichever one is greater. And then, yeah, I guess I would just say, as I've mentioned throughout, we are a very solutions-based lender, and we do put a lot of priority on customer service. So if any of you were to have any questions about potential or upcoming deals, or if any of you do have deals in our pipeline currently, never hesitate to reach out to me. I'm happy to answer any questions that you might have.
So in regards to the compensation, do you allow or that the broker, if they want to charge a fee, is that
Yes.
acceptable as well?
So we do have on the fixed and variable, we do have our sort of standard basis point compensations. I know that I believe it can be negotiated with the underwriter up to a certain extent. What was mentioned to me I know, for example, on the open mortgage, the fee split, we can do a 2-to-1 split, which I guess would be about 3% commitment fee, 2 to yourselves, and then 1% to us. We do typically lean towards the 50-50 fee split, but
no, I just meant like if you're going to pay us 50 points, and we're used to getting paid 110, so we would charge the client directly another 50 points.
Right.
So they don't have an issue with that.
Yeah, I don't, as far as I know, I don't think that we have any issue with that. I know that based on our guidelines, those are our payouts, and as the sort of volumes go up, there are certain incentives which lead to higher compensation amounts. But
Okay.
in terms of charging the borrower, I don't think that there is any issue on our ends in terms of a higher compensation amount.
Okay. Chris?
Chris, I'm going to ask two questions that are in the notes, and I think one of them is probably yours. Will you pay out a tax liability, so CRA?
Yes, we can pay out tax liabilities. I guess it's dependent on if we are using the income, say if there's a tax liability on income tax, or yeah, I guess that would be the case. If we need that income to qualify, we would need it to be paid out prior. But say if we aren't using the income that the tax is owed against, or their outstanding taxes for, then hypothetically we could have that as one of our payouts. If that makes sense.
It's interesting. I've never heard of that before, but yeah.
So like if we aren't having to use that income source, say.
Yeah, no, I totally get it.
Okay.
I think, it's interesting. I've never heard it taken that way, such that the tax liability. So for instance, you've got a husband and wife, husband, earns a huge amount of money. He's got a huge tax liability. We won't use his income because he's got a tax liability that we want to pay out.
I mean, if we are able to have it qualified with the wife's income, in that case, hypothetically, I've seen it myself that we have paid out outstanding CRA liabilities. It's maybe something I will double check just to make sure I'm not leading you astray, but I know personally I have seen CRA liabilities paid out.
Right.
I don't think we can use that income towards qualification, but I don't see why we would have an issue with having it set as a payout.
Okay, if you can get back to me on that would be awesome.
For sure.
And then one more question on the notes, and then I'll let
Oh,
Chris
sorry,
ask.
I just wanted to ask a question on
Jane,
that.
1 sec.
Okay.
You can't talk yet. I'm not done.
Okay.
What is? I'm in charge. What are the rates like for the Heloc?
Our Heloc rates are slightly higher. Let me pull that up.
Can we just quote that just slightly higher, and then we're good?
Yeah,
I think that'll
maybe not.
meet the requirement.
For our
document,
680,
right?
no. So for our 680 FICO owner occupied situation, it is prime plus 5.24%. For a 720 FICO, we are able to offer it at prime plus 4.74. So that is kind of the standard, increasing at a sort of exponential rate as the credit score does lessen.
Okay. Jane, no, you know what? I'm going to put it to Chris because Chris had his hand
first.
So Jackson, you mentioned reverse mortgages. Are you looking after the reverse side, or do we continue to deal with Simone on that?
So Simone is our reverse mortgage BDM. I am available to, be contacted if you do have reverse mortgage questions, but I guess Simone is our main point of contact. If you're already in contact with her, feel free to continue.
Yeah,
discussing
I'll do
reverse
that. And, the only headache that I've had in the last 2 reverse mortgage deals I did was the portal is not great. I'm sure you guys are working on it. I'm getting documentation requests or notifications on files that were closed and funded days ago, and something's goofy there. That's fine. I know you'll work it out.
Yeah.
If anybody else is going to try it and dealing with a portal, just be patient.
Trust me. Having been on the fulfillment side, almost all my day was spent on Equitable Connect. It's definitely a work in progress and a bit of there's definitely a bit of a learning curve there to get it all worked out. We're doing our best to try and sort out any of those issues, but yeah, I guess I appreciate you being willing to stick with us and deal with Connect while we sort that out.
Okay.
And then I think there are a couple questions in the chat as well. If no one else had any questions.
Let's give it to Jane, and then we can go address Jane.
Yeah, she put her Jane in the chat. Yeah, Jane put her question in the chat.
All right,
Right.
Jane. So Jane asked, just wanted to know how high you can go on the CRA debt payout. 30K, 150K, how high?
That I'm not exactly sure of. I would imagine it would fit similar to our standard debt payouts, and that if it fits in the debt service, we could probably pay it out. I haven't ever heard of there being a specific CRA outstanding amount cap. So I would imagine that it all just depends on whether it fits in the debt service or not. But again, that's something that I can definitely go and double check if there's a max amount on CRA payouts for. And And then I think I see another question in the chat regarding mobile homes on land and non-residents. I'm assuming borrowers without Canadian residency. So to answer both those questions, mobile homes on owned land, I think we would consider mobile home on owned land to be an acreage loan, which we can consider on a case-by-case basis. We can't do more than 5 acres, and we are also limited to a 65% LTV on any acreage properties. From my understanding, I think depending on the land, we do also like there to be a home of some, I guess, a grounded home of some value on the land as well. So again, that one would kind of be on a case-by-case basis. If you wanted to, reach out to me with some more info, I'd be happy to help you out with that one. And then non-Canadian residents, to be able to use their income or to have them as a borrower on the file, all we ask for is confirmation of temporary residence or confirmation of a work permit. So those would be our 2 requirements for, I guess, non-residents or individuals without Canadian citizenship. And I guess, did anybody else have any other questions, or? Guess not. All right. Well, I guess thank you very much, all of you, and I guess to you, Deb and Pete, for letting me stop in your meeting today. I appreciate you giving me the chance to speak to you a little bit about Equitable and our products. So thank you very much.
Awesome. Just wanted to do a quick check. Is everyone receiving Jackson's emails? Yes,
That is a
nods.
good question.
That's good. Awesome. So I'll post this video after, probably about a day or so. We'll have it up. And if anyone needs to get a hold of you, I will also link in your email address in there. So yeah, thank you so much, Jackson.
Fantastic.
Really appreciate your time.
Thanks,
Yeah,
Jackson.
thank you for having me.
I probably have a deal I'll call you about tomorrow.
Okay, great. Sounds good. I look forward to it. Oh, I see Jane also mentioned that she needs the emails. Maybe just if there's anyone who doesn't have the emails, I'll send maybe a group email with some of the answers that I owe some of you, and I'll also attach, I guess, my contact information to it.
I'll send you our most recent broker list, so just in case.
Perfect. Okay, great. Awesome. All right. Well, again, thank you very much for your time, everybody. Have a nice day.
Thanks.
Great. All right. Bye now.